Holy smokes, guys, today I want to share with you 10 stocks that Goldman Sachs analysts believe will go up 50% plus in the next 12 months. We're talking about massive moves. I want to share these companies with you guys here today. Now, first and foremost, before we get into today's video, just understand that analysts sometimes have really high price targets on stocks or really low price targets on stocks. And just because they have those price targets, it doesn't mean that the stock is going there. It just means that those analysts believe it is going there, okay? So when I kind of share a list like this with you, like 10 stocks that they think are going to go up a ton, doesn't mean they'll all go up a ton, doesn't even mean a few of them will go up a ton, but I think it's very interesting to kind of look at some of these and say, an analyst believes that this stock's going to go up 70% over the next year. Let me at least look into this company and see if there's something there. There might be something there that says, dang, I need to invest in this company because, you know, it does have real big potential, or maybe it's like one of those things where you look into it and it's like, no, I don't think the analyst is right here. Some of these, they do have the potential probably to go up 50% plus over the next year, and some of them, honestly, probably not, guys. So I hope you enjoy this as always. By the way, if you want to get into any of my premium courses, they're linked down there in the description, all right? First one up here, we're going to list all of these from basically the one that's expected to go up the least to the biggest, all right? And we're starting at 60% plus. Fedex Corporation, ticker symbol FDX, is the first one up here, guys. 60% plus move they're expecting for FedEx over the next 12 months. I would put it somewhere around $275 roughly. FedEx Corporation obviously is one of the biggest transportation companies in all of the world, especially the developed world, Europe, United States, as far as moving packages around and all those sorts of things. They not only move packages around for consumers like you and I, just regular folks, but also for big businesses, transportation of big objects and things like that, guys. So massive move they expect in FedEx, obviously, over the next 12 months. Number two up here is Anadarko Petroleum Company. Ticker symbol APC. Anadarko Petroleum Company is an oil and gas company. They're expecting a 60% plus move on Anadarko, all right? Anadarko basically has a market cap of a little over $22 billion. Trailing P of 37 on this one and a forward P of just over 17 on this one. Anadarko has come back a long way. If you look at their net income here, basically this was a company that in 2015 lost $6.6 billion. Then the next year they lose about $3 billion. Then they lose about $500 million. Now they actually make $600 million plus net income positive last year. So oil prices essentially fell dramatically starting around 2014. And so 2015, 2016, and part of 2017 were just horrible years for a lot of the oil and gas players out there. A lot of them had gotten very over leveraged because a lot of them were expected oil and gas prices to stay high, oil price specifically at a 70, 80 plus dollar a barrel, numbers, and basically it's fallen to 40 or $50. And being that a lot of these companies got highly over leveraged, their balance sheets went to a very bad place and they had to sell off a lot of assets, Anadarko being one of those players. But now they're a lot healthier, a lot of these oil and gas players out there, right? Number three up here is Lbrands, ticker symbol LB. So Lbrands, they own Victoria's Secret, they own Pink, they own Bath and Body Works. The Goldman Sachs analysts are expecting somewhere around a 65% plus gain in Lbrands stock over the next year. It's a company that has a pretty small market cap considering the brands they own, right? A little, about $7.5 billion market cap, 11 trailing P or almost a 12 trailing P, about a 10.5 forward P on this company. Now Lbrands, it's been a rough past few years for this company. If you go back to 2015, they're doing $1.2 billion in net income, and basically that's fallen about 50%. If you look at this latest year, they make about $644 million of net income, but basically that's down about 50% over a 4-year span, guys. That's obviously a very bad sign. Now Lbrands is one of just many retailers out there in the physical space that has gotten hit very hard by kind of the retail apocalypse, and a lot of these mall retailers been hurt. Lbrands also had a lot of self-inflicted wounds, a lot of bad decision making there around products and things like getting rid of swimwear and whatnot. They've made a lot of mistakes at Lbrands. They're trying to fix things, but sometimes they just can't get out of their own way with that company, all right? But needless to say, they do own some great great legendary brands. The management's just gotta, get things together there. A lot of what Lbrands' demise has come is basically because of management's poor decisions, okay? So that's that one. Number 4, American Airlines Group, ticker symbol AAL. American Airlines Group, obviously one of the biggest airlines out there in the world. They're expecting around a 65% gain for this stock over the next year. American Airlines Group, only about a $15 billion market cap, but look at how much bigger the enterprise value is on this company, about $44 billion. Trailing P on this one of about 11, forward P of about 5.5, so super low forward P company. Now we know there's been a certain individual buying the airlines like crazy over the past year or so. It's not me, but it is Mr. Warren Buffett. If you look at Warren Buffett's stakes in these airlines, they're getting really big. He's got about a $3.6 billion stake in Delta, $2.8 billion in Southwest, $1.7 billion in United. American, he's got $1 billion+ stake in that company. Buffett is very bullish on these airlines. He kind of looks at it as, it's not like the old days where airlines could get, destroyed because there was so much competition. Now he really believes that there's just kind of like consolidation there. There's kind of like a monopoly with the few biggest airlines, and they just kind of run the world in sense of airlines, okay? So he's been buying it heavy. Maybe Buffett sees something, the analysts see something, maybe there's something there with those airlines, specifically American Airlines, all right? Coming in number 5 is Tiffany and Co, one of the most expensive places you can possibly buy jewelry out there, all right? Analysts are expecting this one to increase by about 70%, guys. I would put it somewhere around $170+, all right? $13 billion market cap, trailing P of about 22.5, and a forward P of right around the same, honestly, just under 22 on this one. Tiffany, obviously, like what a business model, right? You buy some jewelry for a few $1,000s on the wholesale market, right? And you sell it for $10,000 or $20,000. Like that is a beautiful business model. Very small products, and needless to say, a business that just kind of rakes in the money. But they're kind of going through some rough times right now. Obviously, they're not expected to have any growth, but analysts believe they can get that back going. 70% up increase in the stock price over the next 12 months. That's crazy, all right? Tapestry Corporation coming in at number 6, TPR. Tapestry, there's another one. Goldman Sachs analysts are expecting around a 70% rise in the stock over the next year. Market cap on this one just under $10 billion, trailing P of about 13.5, forward P of just under 12 in this company. Now, if you're asking, what the heck is Tapestry company? I can understand why you wouldn't know what the heck that is, but essentially Tapestry is kind of the new name for Coach, okay? So Tapestry basically owns Coach, which you probably know for purses and wallets and things like that, as well as Kate Spade, as well as Stuart Weitzman. So that's basically what the Tapestry company is. They used to be named Coach Corporation, but they changed it to Tapestry because now they bought Kate Spade, they own Stuart Weitzman, and they're probably going to add more brands in the future. So they just kind of wanted to be like a fashion house type name rather than just Coach out there or something like that, guys. So very interesting, 70%+ move. Holy smokers, guys. Some of these moves are insane they're expecting, okay? Number 7 here is Freeport Mcmoran. Ticker symbol FCX on this one. It's about a $13 stock. The analysts are expecting around a 75% increase in this one's share price over the next 12 months, guys. This one has a little under a $20 billion market cap, trailing P of 7.5, forward P of 14. That's never a good sign when you see a trailing P actually much lower than a forward P. Freeport Mcmoran is a huge mining company and materials type company out there, guys. Obviously a business model that's always a needs-based business, okay, and that's great about that one. This next one, guys, I'm not sure I agree with this one at all. This one's a little crazy in my personal opinion, okay? Coming in number 8 is Netflix, all right? Ticker symbol NFLX. This analyst is expecting Netflix stock to go up around 80% over the next year, all right? Netflix has around $161 billion market cap on it right now, trailing P of 138 and a forward P of 58 on this company. And I'm just not sure this stock is in a place where it can go up 80% over the next year. When I kind of look at one, that's an insane move, okay? 2, when I kind of like look at Netflix, we also see Apple coming in the space seriously. We see Disney coming out with products now in the streaming space. And I'm just looking and I'm like, Netflix kind of monopoly on the streaming services is going away and going away and going away over the next few years. And I'm like, if you're looking at this one. If it was a cheap valuation, you could say, yeah, well, maybe some people will still buy it. They'll maybe be the biggest player still. Maybe it's still worth a buy. But if you look at this here, this company's at a 58 forward PE, 138 trailing PE. It's not a cheap company by any stretch of the imagination. And obviously, you're in a position where there's tons of competition coming in the space right now. So that's probably the one I most disagree with when I look at this list, and I'm like, that one's just insane. If Netflix stock goes up 80+%, that's just mind-blowing, okay, over the next year. That would be crazy, okay? Number 9 is a company named Nectar Therapeutics. You've probably never heard of this company. I never heard of this company before I basically made this list here today. They're expecting this one to go up about 90% over the course of the next 12 months, guys. That's crazy, okay? This one has about a $6.1 billion market cap on it, trailing P of 9, but a negative forward P, so they're not expecting to make any money on the bottom line this upcoming year. I'll just kind of read you kind of like what basically Nectar Therapeutics is. It's a biopharmaceutical company that's developing drug candidates for cancer, autoimmune disease, and chronic pain in the United States. If you want to kind of read more in depth about that company, there you can. Once again, not a company I had ever heard of, and I'm sure some of you guys had never heard of this one. This last one is very controversial, I will say. This one's probably even more controversial than the Netflix one, because we're talking about this one. They expect an 100% plus increase, so basically a double up in the stock price, okay? Coming in at the biggest one is PG&E Corporation, ticker symbol PCG. They expect this one to go up 100+% over the next year. This one is around a $9.8 billion market cap, no trailing PE on the company, forward PE of about 4.5. All right, now if you don't already know, PG&E is involved in a lot of stuff because of the California wildfires this past year. They're getting a lot of the blame for that, and the way I kind of look at this is almost like a BP oil disaster. Remember when BP had the oil disaster? That was like 2010, 2011. They were kind of like obviously vilified in a huge way for that, for what happened there. And now PG&E is in a very similar situation because of those California wildfires, and a lot of people are putting the blame on PG&E in this situation, and so it's not a good look for the company. A lot of people felt like maybe this company could go out of business, have to face bankruptcy or something. Who knows how that would shake out, but they're in a tough spot right now. However, sometimes if you can get a stock when it's in a tough spot and it's not the end of the world and they don't go bankrupt, sometimes you can get a ridiculous gain. But I'm just looking at that one, I'm like, it's not one personally I want to touch, even if there is some crazy potential upside there, because the risk on the downside could still be substantial. So we just have to see how all that shakes out. Anyways, I want to hear from you guys in that comment section. Do you like any of these stocks? Is there any, specific ones in this list that you actually own? I would love to hear from you guys in that comment section as always. Thank you for watching and have a great day.